Eli Lilly rose its annual forecast by $3 billion on Thursday. That's after it ramped up manufacturing capacity for its blockbuster weight loss drug, Zepbound. This sunny outlook sent shares up to heights of 13% in early trading. The drug maker was on track to add nearly $100 billion in market value if the gains hold track through the day. Lilly is already the world's most valuable healthcare company, largely due to its demand for obesity treatments. It has hiked its 2024 revenue forecast to between $45.4 billion and $46.6 billion. It said the sales of the sought-after Zepbound crossed $1 billion for the first time in a quarter since its launch late last year. This milestone comes a day after Danish rival Novo Nordisk reported a rare miss on quarterly sales of its popular weight loss drug Wegovy. It also trimmed its full-year profit forecast. Lilly and Novo are racing to meet unprecedented demand for their popular drugs. They have been shown to help patients lose as much as 20% of their weight on average. As Lilly's supply for Zepbound and drug Mounjaro, which has the same active ingredient, increased during the quarter, the company said it was able to backfill orders and increase stocks at wholesalers. They expect the drugs to make a combined $15 billion this year.
Here we have the hourly price chart for Eli Lilly and Company, stock ticker LLY. As we can see here, the stock is taking a sharp jump in today's trading session. This is largely based on positive news from earnings releases that were reported by the company. Overall, this has sent share prices to highs coming in at $877.67. This is significant because previously the stock had posted near-term lows coming in at $747.54. So as we can see here, this is a very significant price jump in a very short period of time. As this price move occurred, a few different things happened at once. One, we did see that share prices gapped higher and left a significant price gap within this price chart. As we can see here, the price gap really starts at right around $773.70 and then extends all the way to $825.15. So in percentage terms, this is a very significant price movement that will now need to be refilled to the downside. Currently, what this does mean is that the stock could experience some excessive volatility relative to its historical performances. For the most part, if we drill out here and we look at the longer term timeframes for LLY, we can see that the stock has been trading in a very strong uptrend for an extended period of time. For the most part, this is not the type of stock that experiences large rounds of volatility, but when we see new earnings information like this, increases in price volatility become much more plausible. So if we zoom back in here, we can see some important significance within the recent price levels that have been formed within this chart. So currently what we want to look at would be the prior price highs, which were posted during the middle of July, roughly July 15 trading period. Ultimately, these price highs came in right around 965. And as we can see then, in all of the market turmoil and volatility that followed, we did see a fairly significant price movement to the downside. Ultimately, these price lows came in at roughly 750. So this does mean that the share price valuation saw extended price movements lower, in contrast with the stock's broader history here. When we talk about Eli Lilly, we're really talking about a stock that has moved in an almost parabolic direction. Downside price movements like this very rarely occur with this stock. So more recently, this two-way activity is significant because it does suggest that even predictable, stable pharmaceutical companies, excellent dividend payers like LLY, can fall victim to significant price movements to the downside. Overall, this is the type of trading action that we have seen throughout this summer. Many major names, Microsoft, Apple, Nvidia, some of the largest names in the market have fallen victim to the recent price action. And this does suggest that we could continue to see downside price movements in Lilly as well. However, with all of that said, we do need to keep in mind the fact that the company did report strong earnings here, and we have seen positive price movements to the top side. What does worry me about this movement to the top side is the fact that we did fail right ahead of the 61.8% Fibonacci retracement of this prior declining move. As we can see here, this share price high coming in at 838.15 fails to match the 883.59 level that does characterize this 61.8% Fibonacci retracement. For these reasons, there is continued scope to the downside, despite the fact that the company did report very strong earnings during its most recent reporting period. Overall, if we do see prices continue to move to the downside, I would expect a lot of this selling pressure to be contained by the 775 level. There are a few different reasons that I suggest this is likely to be the case. One is the fact that this area marks the bottom of the current price gap that can be found in share price action, as we can see here. In addition to that, we're likely to start seeing moving average activity roll over to the top side, and this range, the range that's created by the exponential moving average cluster, could start to work in favor and in support of the stock share price in the event that we do start to see price declines from here. In addition to this, we do see that the indicator reading on the relative strength index is currently moving in the positive direction. Specifically, after falling into oversold price conditions during the July 18 trading session, we can see that the share price action has steadily moved higher throughout this time period, even though the share price itself had continued to move lower during these instances of negative movements within the relative strength index. What this really means is that the stock has experienced a bullish divergence, which does support the outlook here for this price spike higher. In other words, some of these movements to the top side could have been anticipated in advance as the relative strength index continued to point to positive gains, even while the share price decline continued to move in the negative direction. Going forward, I would need to see either a break to the downside coming in at roughly 747.50 in order to suggest that a near-term top is now in place at roughly 965. If this is the case, most likely what we would start to see would be a period of sideways consolidation so that the stock could manage some of its losses and regain its footing. Given the fact that the longer-term trajectory is clearly focused on the positive direction, I would continue to expect bullish trend waves to unfold in this stock action. To the top side, the main level to watch continues to come in at this 877 level because this does work in anticipation of the 61.8% Fibonacci retracement that rests about $5 higher. Overall, we will need to see a break of both of these areas in order to reinvigorate these uptrends and to target the prior highs, which came in right around 965. If we do see a retest of this level, I do expect these levels to start to break because a double top resistance zone does not match the force and broader action that's seen within this price chart as a whole. As we can see here, the positive momentum should be strong enough to break through a double top in the event that we do see an initial failure on a retest of the 965 level. Overall, these are the current price levels that I'm watching, and these are the broader earnings effects that have propelled prices higher. Here's the current market analysis for Eli Lilly and Company, stock ticker LLY. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.